This is the Asia Trade. We're counting down to Asia's major market opens in what's shaping up to be a risk-off session early in the day, Avril. And we're also, of course, following the U.S. elections where voters are casting ballots in more than 30 states on roles from everything from judges to governors and mayors.
Shery, to your point about the risk-off, arguably Asia already led the way yesterday, got a head start on that. We'll see how much chop we see in the session following the dismal performance on Wall Street overnight, with tech leading the selling.
Yeah, Japanese stocks actually fell for the first time in 5 sessions. So we will be watching, as you say, Avril, those tech stocks, given, of course, the concerns about being overstretched and valuations surrounding these stocks. We're also following the latest from the Bank of Japan's latest minutes. One BOJ member saying that it's not too late to make a decision after they get more data. Remember, that was the policy meeting where they kept the rate steady at 0.5%, with 2 dissents calling for a rate hike. But one BOJ member saying that they should avoid surprising the market with rate hikes. Remember, after the BOJ meeting, we saw that incredible pressure on the Japanese yen, which was a little bit supported after comments coming from the finance minister, but we're still sitting at around that 153 level against the U.S. dollar. And you can see the downside pressure on the Nikkei and the topics at the open as a 10-year yield holds steady at that 166 level. But it's really about the tech stocks, right? Especially what's happening in South Korea. Take a look at how the KOSPI is opening right now, because in the previous session, we actually had a caution to investors coming from the Korea Exchange on SK Hynix after that rally of 240% already this year on that AI optimism, really lifting all stocks. We're seeing the KOSPI now losing almost 2% right there. And of course, this after gains of almost 70% this year already, Avril.
Shery, take a look at how Australian assets are faring about an hour into the session. We are seeing Aussie bonds tracking treasuries amid the risk-off, and certainly that pressure coming through on stocks. But worth highlighting what we're seeing on the Aussie dollar against the Kiwi, highest in 12 years. This is against the backdrop of the New Zealand jobs data coming in quite weak. So we are, of course, seeing that playing out in the session. Flip the board, take a look at what we're seeing on the dollar, because that is where we've seen the resurgence. Bloomberg dollar index has hit the highest in the past session since May. And this is, of course, amid some of the risk off, but also as investors turn away from stocks. And keep in mind as well, against the backdrop of this Fed bet recalibration. And as I say, investors have been turning to Treasury. So that overnight actually helped the yield on the 10-year pull away from the 410 level. We are seeing, of course, amid the relative risk off, it's really got to do with how Wall Street executives sounded the alarm. They said to brace for pullback. We had the likes of Michael Burry disclosing some of these bearish bets, including on Palantir, Nvidia, and then after hours, AMD, Supermicro. Their forecasts failed to impress investors. So not a lot of good news for some of these high-flying tech stocks. Bitcoin was at one point below 100K. It's bouncing above that for the moment, Shery.
Yeah, not surprising given that we still have that psychological overhang from that liquidation event back in October, right? So we're following Bitcoin prices very closely. The broader crypto space, we're also following, as Avril mentioned, some of that more pessimism that we're seeing from CEOs across the U.S., from the likes of Morgan Stanley's Ted Pick, from the likes of David Solomon as well, saying the pullbacks are actually normal features of market cycles. Very obvious, but of course, right now we're pretty much stretched when it comes to those high-flying tech stocks, as Avril had mentioned. And we'll be following those stocks across the Asian session as well, at a time when we're also following the U.S. elections in the United States across more than 30 states, voters casting their ballots from everything from governors to judges. And of course, New Yorkers also awaiting results of the election for the city's next mayor. Democratic nominee Zohran Mamdani has led opinion polls since the June primary, promising to tax the rich and make the city more affordable. Let's bring in Washington correspondent and Balance of Power co-anchor Joe Matthew. Joe, and of course, this is not just about Mamdani. This is also about the future of the Democratic Party.
Well, that's right. You put that perfectly. And there are going to be a lot of questions this evening, depending on the results, as to who has the playbook for the midterms here. Mamdani, as you suggest, is not just a progressive. He's actually built himself as a democratic socialist, and calling for things like free bus service and city-run grocery stores may run counter to what a lot of moderate Democrats believe across the country. Case in in point, those who are running for governor in the states of New Jersey and Virginia. We'll get to that in a moment. If you look at your screen now, those are the three candidates. Mamdani is, in fact, enjoying a huge lead over former Democratic Governor Andrew Cuomo and Republican Curtis Sliwa, who you see there in the beret. It's gotten to the point where even Donald Trump and his lieutenants have chosen to endorse Andrew Cuomo, who they see as having a more likely chance of beating Zoran Mamdani than Curtis Sliwa. There aren't a lot of MAGA voters in New York City, though, so it's unclear exactly whether that will have any impact on the outcome of this race. It's expected to be a double-digit turnout here, a double-digit lead for Mamdani, having seen a massive surge in early voting. I will mention as well, polls have just closed in Virginia, just in the last 5 minutes, where we have one of the most important governor's races on the map this evening, with Democratic Congresswoman Abigail Spanberger enjoying a pretty wide lead as well over her Republican rival here, the Lieutenant Governor Winsome Earl Sears. Spanberger is a former CIA officer as well as Congresswoman, and with Virginia being right next door to Washington, D.C., it's home to thousands of federal workers who have been furloughed in the government shutdown. It's also home to a lot of federal workers who were fired by the Doge under President Trump. These factors are expected to play in Spanberger's favor, and if you talk to political strategists in Virginia and around the country, they question the candidate quality on the Republican side here. Winsome Earl Sears has had a difficult campaign in the state of Virginia. Very different in New Jersey, where Republican Jack Ciattarelli, running for governor again, has made great strides in the state against another Democratic Congresswoman, a moderate named Mikey Sherrill. This is a state that saw big advances by Republicans, specifically Donald Trump, in the 2024 election. And Ciattarelli, who you see on your screen there, is hoping to exploit those gains this evening. Guys, this has gone from a pretty decent lead for Sherrill, the Democrat, to a race that many polls show being too close to call. So we're going to be watching this one very closely, and it could go later into the evening, again, as these votes are counted in a race that could be down to literally 1 point. These are the three big ones. You add Prop 50 in California, which is the redistricting proposition, would allow the state to redraw its congressional lines. And we've got some high-stakes contests this evening in the United States.
Joe, thank you for that breakdown. You summed it up really well, but also wanted to get your sense of what this might mean about potentially a political nudge for either side of the aisle to end the U.S. government shutdown.
Well, it's a great question, and a lot of the lawmakers we're talking to seem to believe that this election day, this election night, is an inflection point that some Democrats wanted to wait for in terms of getting their base out to vote, not looking to cave in front of Republicans in Washington. Whether you believe that or not, there is a sense that we could be nearing an end of this shutdown in the days ahead, maybe by the end of this week. Tomorrow it'll be a record, 36 days, the longest government shutdown in American history. And knowing that SNAP benefits, according to the president, will not be fully paid for until the government is reopened, there does seem to be a renewed urgency. And getting through the contest this evening might actually present that opportunity for Democrats and Republicans to get down to the table and work things out in Washington.
Our Washington correspondent and co-anchor of Bloomberg Balance of Power, Joe Matthew, there with a busy day, of course, following all of the elections across the United States. We're following the markets as well, where we're seeing U.S. futures under a little bit of pressure after stocks fell in the overnight session. Of course, we had tech leading those declines, concerns about valuations raging across Wall Street CEOs as well. Joining us now is Anna Wu, cross-asset investment specialist at VanEck. Anna, great to have you with us as we get the Asian session started. We had already seen significant pressure over in South Korea, for example, because of the Korea Exchange warning about SK Hynix because of that incredible AI rally. Where are we in Asia when it comes to these valuations of these high-flying tech stocks?
Hello from Sydney, and good to see you. I think very much to your point, we had a 5-month rally in AI thematic in the US and across the board. So the bar is simply just getting higher. So now a modest earnings beat does not translate into price reaction anymore. To that point, the similar sentiment, I guess, is flowing into the Asia market as well. After such a rally that we have seen in South Korea, China, arguably in Japan, 10. I think that bar right now is getting higher as well. However, I want to bring your attention to the valuation landscape, right? Even after the broader rally in Asia tech that we have seen so far, it's still valued much lower than the US tech, and which makes it really a value and a growth play in the long term. And if we look at the EPS growth, it's not great, but it's improving sector for the sector quarters after quarter. So I think the long-term story for this sector in Asia is still constructive.
What about not necessarily the direct AI plays, but the indirect ones? Because we know that in order to power artificial intelligence, we'll need energy, for example.
That's a great question. I really love that because exactly. The global AI industry is maturing over the last couple of years. So it's gone from, this idea generation phase, who has the best model, really to an operational intelligence phase where we need to see actual monetization and operational AI ecosystem. And in that sense, the supplementary roles into the AI rally right now are benefiting and also positioned to benefit in the coming quarters as the margin expansion goes in. To your point, energy play is one of the pockets of opportunities that's getting a lot more attention compared to the previous quarters because AI, after the record amount of AI capex, energy and electricity demand in specific, it's rallying to decade high, and it's positioned to go 10x by 2030. So that demand gap needs all sorts of energy play. So one of the more prominent play right now is the nuclear. It gives 24/7 clean non-emission play from that part and benefiting the uranium miners as well, and to a certain extent the other renewable energy sources companies have been growing very fast in the second half of the year. Also look at the valuation side as well. Again, pointing to that growth and value play, they are very attractively valued comparing to the other pockets of AI.
With that in mind, which market do you think will lead the way for the rest of this year and into the first quarter of next year? Is it still going to be perhaps South Korea for the region, especially given how we're seeing a resurgent dollar?
Yeah, okay. I think that question really goes into two parts. I think in terms of markets that is positioned well for towards the end of the year to next year, Korea is one of the more high conviction market because it's got the cleanest growth play right now, and also translating into the latest earnings season. While it's still quite early days, but we can still see that over half of the companies are reporting surprising to the upside. Also, it's got two cleanest play in terms of growth. One is AI. Its strategic position in the high memory chip specialist role in the global AI supply chain is giving it a long-term tailwind and long-term contracts as well, with margin expansion possibilities. But also, it has a very unique role in the global defense sector, and also that has an AI play to it as well. So these two catalysts, I guess, is driving the Korean market to a broader growth play. Outside of that, I think China, even though right now the rally has stalled a little bit, and I think investors are waiting for more pronounced and substantial policy stimulus to pick on that rally again. But also AI sector in that country can still defy gravity as the broader, hardware makers rally and race to fight for the role for China's domestic NVIDIA. Also, sorry, to your point
I will have to leave it there, but it was really good speaking to you, cross-asset investment specialist at VanEck, as we're following breaking news at the moment, because take a look at how Nintendo is doing. We're seeing a surge of more than 10% at one point, and all of this coming at a time when they raised their Switch 2 sales forecast to 19 million units by March next year. Now, that's up from the original guidance of 15 million units. They also raised their fiscal year operating income forecast by 16%. Just this blockbuster consumer electronics debut this year is really doing well, especially going into the holiday shopping season. So do watch out for this stock in today's trading session, which is a broadly down day across markets in Asia, but you can see Nintendo popping there. More ahead. This is Bloomberg.
Let's take a look at some FX pairs and crosses. Take a look at how the yen is faring. It's pulled away from that 154 level. But of course, the Kiwi against the Aussie on watch following a weak New Zealand jobs print. We also had the RBA keeping things on hold just a day ago, but really not letting on much on future path, perhaps pushing out bets for the next rate cut into next year. Of course, dollar China also in focus with the bounce in the greenback looking pretty stable for the moment, but it has been under pressure for much of this week. Now, the annual China International Import Expo begins in Shanghai today. The event is one of President Xi Jinping's flagship initiatives aimed at showcasing the country's domestic demand potential. Our chief North Asia correspondent, Stephen Engel, joins us live from the scene. So, Steve, the first big import fair after the Trump-Xi trade truce.
Yeah, that's right. So that's why we're here, really. I mean, we've been here every year. It's been going on now for 8 years. It was set up by Xi Jinping in 2018 to kind of, in part, alleviate some of the massive concerns that major trading partners like the United States and others have about that trade surplus that China enjoys with many of its trading partners, because China simply exports more than it imports. So, again, here's the front page of the Shanghai Daily today, essentially saying CIIE welcomes the world. And clearly there have been many more policies coming out of late to boost consumption here, to get that household contribution to GDP upwards beyond the 40% it is currently. Maybe, as Stephen Roach, the former Morgan Stanley Asia Pacific MD, essentially said, it should be upwards of 50. There should be a target set. The households, though, are reluctant to spend as much to rebalance the economy. So again, there's lots of facets to this. Importing more, which comes first, the chicken or the egg, right? So right now, the focus is on coming on the heels of this trade deal. It wasn't a massive trade agreement. There were bits and pieces. China's going to be buying more soybeans from the United States, and there's essentially a de-escalation in the tensions. The follow-through is going to be the key right now. One thing that was not discussed specifically were the potential billions of dollars in NVIDIA selling its top-level AI accelerators, Blackwell, into the Chinese market. Essentially, the national security senior officials in the Trump administration kiboshed that, and Donald Trump did not bring that up last week in Korea. So, again, that would have been a big purchase by the Chinese, obviously, to alleviate that trade imbalance. But again, it's baby steps right now going forward after that trade truce between Xi and Trump.
What are we expecting from Premier Li Qiang's speech today?
Yeah, I think he's going to simply reaffirm China is opening up. China, as we saw that front page headline on the Shanghai Daily, that China is open for business. It welcomes investment, and also, of course, China will be buying more products from around the world. That's why from tomorrow, we'll be down on the floor of the big National Convention Center here, talking to various country booths and products that are going to be sold into China. He's going to be promoting this area, and boosting consumption is going to be a big part of the speech from the Premier, Li Qiang, who usually opens up the CIIE every year.
Our Chief North Asia correspondent Stephen Engel there joining us from Shanghai. And take a look at the broad sell-off that we're seeing in the early Asia trading. We're seeing the Nikkei losing more than 2% and the KOSPI losing more than 3%. And remember, it's been really the tech trades on the Wall Street session that have led the markets lower. Concerns about valuation also extending to Asian markets, so much so that we had the Korea Exchange yesterday warning about SK Hynix's 240% rally this year already. You can see the ASX 200 also falling in tandem, down 0.3%. We have more ahead on the Asia trade. This is Bloomberg.
It is looking bad out there. Tech is leading the way down in the region. On the KOSPI, you're actually seeing, I think, the worst two-day selling since at least April. And SK Hynix, of course, not being supported from that warning from the Korea Exchange just a day ago. You also had, think about this, the hot Korea CPI numbers. What does this mean about the BOK's rate trajectory? Now, global funds are also locking in profits from South Korea's AI-led rally, while that unusual exchange warning also sent shares of SK Hynix lower. For more, let's bring in Asia equities reporter Sang-Mi Cha. So, Sang-Mi, put things in perspective for us. Why are we seeing the selling so bad in Korea for the moment?
Yeah, so it seems like there has been some concerns over valuation in the run-up to the KOSPI rally. We have been seeing 70% gains this year alone, and a lot of the investors are saying that maybe it's time to call the Korean shares a bit more expensive now. This is just a few months ago we were talking about the Korea discount, but now they're talking that the valuation is perhaps in that overheated territory right now, and especially that was clear in stocks like SK Hynix that we have seen. It was quite rare for the Korea Exchange to actually put out this warning, investment caution for such a mega cap stock. And that is because whenever you see so much of that rally in a short period of time, that is the issuance that they go with. And it is not necessarily mean that they're going to halt trading, but it is to actually warn the investors to proceed with caution. But it is also a warning, pre-warning before the exchange potentially raise some of these caution to the next level, which could actually indeed trigger that halting, the trade halt as well. Today we're also seeing those chip moves down, definitely, again, because of valuation concerns and some of the earnings effects from the U.S.
Yeah, in fact, the KOSPI right now dropping 4% given those valuation concerns that have, of course, started in the Wall Street session already. And in Korea, we're also contending with those stretched stock numbers with SK Hynix, as you mentioned, growth of 240% already this year. And the KOSPI also gaining almost 70% this year. But it's also about the central bank policy path, right? Because we saw inflation just quickening more than expected. Does that mean that investors are a bit worried that those rate cuts might not come?
That's correct. Indeed, when we look at the October prices, it's been actually very fast. The prices increase was a lot faster than expected. It's climbed about 2.4%. That's a very faster pace that we're seeing from 2.1 in September. And that's going back to July 2024, that was 2.6. So there is that drastic increases that we're seeing here. And of course, it all comes down to that slide in one against the dollars, 1.9% slide that we saw. That's been driving up those import prices. But again, just like you said, all eyes are on November 27, when it's going to be the final policy meeting for BOK to decide whether they're going to lower the rates. They have kept the key rates steady for the last 3 times. And so that is raising concerns whether they're going to do it this time around. And the key question is going to be whether the region, especially the Seoul capital region, property prices are going to stabilize.
Bloomberg's Asia Equities reporter Sang-Mi Cha there with the latest on the Korean markets. We're also following SoftBank in the Japanese session because we're seeing broad downside, which at one point fell more than 10%. And of course, this coming at a time when SoftBank's Masayoshi Son has invested in artificial intelligence. We're talking about a $30 billion investment in just OpenAI. So when it comes to those tech stocks leading the declines on the Wall Street session, we always see SoftBank just taking the hit in the Japanese session. Not to mention that we're also expecting ARMS to report earnings, so we'll be following those results as well. But what a day, really red across the board, really timely to be holding this conference here in Japan. We're hosting the Global Credit Forum in Tokyo later today, speaking with top executives and global asset managers. I'll also speak with Japan's Vice Finance Minister for International Affairs, Atsushi Mimura. Live Go is your function. This is Bloomberg. Take a look at how major benchmarks are trading across Asia. It's a sea of red at the moment, with the Nikkei falling more than 2%, extending those losses from the previous session. The KOSPI also losing more than 4.5% after the warning for the Korea exchange for SK Hynix, which has rallied already 240%. Of course, we're coming from that tech sell-off on the Wall Street session, and you can see tech being one of the biggest losers in today's session. But not for this one share. Nintendo in Tokyo rallying today after it raised its Switch 2 sales forecast, bolstering confidence that the record-breaking console will sustain a strong start. Bloomberg Intelligence says the new target is still conservative, and the company could follow its rivals in raising prices in the U.S. market. Let's bring in tech analyst Nathan Naidu. Nathan, the console doing pretty well, especially heading into the holiday season. Is this sustainable?
Yeah, so that's a good point there, that I think the new target is still conservative. And you mentioned the holiday season. So the new target suggests that the Switch 2 will sell 19 million units for the fiscal year ending March 2026 versus 15 million units prior. But the new target still suggests that the second half sales would actually be lower than the first half, what was already achieved, like more than 10 million units in the first half, which doesn't make sense because the holiday season actually falls in the second half. So that new target still looks conservative to me. And also, let's not forget that Nintendo actually might plans to raise production of the Switch 2 supply to 25 million units. And, and let's not forget that Switch 2 is selling twice as fast than the original Switch in 2017. So those are three very good signs telling me that Nintendo's lifted guidance still remains conservative.
These numbers for Nintendo look good, though, and to your point, maybe it's erring on the side of caution, being a bit conservative with guidance, but I think investors may be seeing through that. That's helping it to buck the trend in the broader selling in Japan stocks today. But wanted to get your thoughts as well, given how good these numbers look. What is your sense of the extent we might see price hikes for the Switch 2 and, moving in lockstep with Sony as well as Microsoft, perhaps?
Yeah, that's a good point. Like, we definitely see that the risk remain Nintendo might need to hike prices of the Switch 2, especially in the US markets. But we don't think that will happen within this fiscal year, fiscal 2026, because Nintendo probably have enough local stockpiles to supply the US markets. But of course, as soon as that US stockpiles run out, Nintendo might not be able to hold back from passing through tariffs to American consumers, as did Sony and Microsoft with their PlayStation 5 and Xbox Series consoles in the US markets over 1 to 2 rounds of hikes this year. But we believe that hikes, even though it might take place in fiscal 2027, might be in the magnitude of 6 to 7% of price hikes to the Switch 2 price tag, and versus about 7 to 11% hikes at the PlayStation 5, and also about 30% at Xbox Series consoles. So, price hike might happen, but probably not within this fiscal year.
What's next for Nintendo after the Switch 2?
Yeah, so Switch 2. The Switch had a really good run, 7 to 8 years of life cycle. So I suspect, obviously, it's called the Switch 2 because Nintendo really want to piggyback on the success of the Switch, calling it Switch 2. So I believe Nintendo intends for this new version of the gadget to have an equally long, if not longer, life cycle than the original Switch. So I suspect that this Nintendo might just want to milk as much out of the Switch 2 platform with selling software, especially higher margin first-party software. We see a slew of releases coming to the Switch 2 platforms, whether it's Mario, Pokemon, or Zelda, as well as third-party popular games coming to the platform. So I feel like the Switch 2 probably have another 7 to 8 years to go. Until then, I think Nintendo might not release another stellar hardware to match the success that we so far see with the Switch 2.
All right, Bloomberg intelligence analyst Nathan Naidu there with the latest when it comes to that Nintendo rally that we're seeing in today's down session across Japan. We're also following Japanese car makers up next on the earnings agenda with Toyota reporting on Wednesday, followed by Honda and Nissan later this week. Nissan has already set the tone by warning of an almost $1.8 billion loss for the year. Let's get a preview from our automotive reporter, Nicholas Takahashi. Nick, should we start with Nissan? And how is their turnaround going?
Well, just last week, they warned that they were going to suffer a big loss this fiscal year, warning of a 275 yen operating income drop. This comes after it withheld its profit forecast for the full year. But, as you know, Nissan is facing a lot of headwinds right now and a financial crisis, the likes of which it hasn't seen in more than 2 decades. So as it deals with these operating losses on its restructuring plan, it's starting to dock those expenses into this fiscal year. Most of them are going to fall during the second half of the fiscal year, so we might see a neutral, if not more positive, outlook during the second quarter, which we'll get results for later this week. But for the full fiscal year, we're looking to see how optimistic it is.
We were, of course, for a time watching the Nissan-Honda potential merger, which did not happen. How's Honda doing?
Honda is in a similar situation, maybe not so much of a crisis. As with Japanese car makers across the board, sales in China and the U.S. have been plateauing, if not on the decline. With Honda, its two-wheel business is really sort of buttressing its four-wheel business, whereas it's losing money on cars, it's making money on motorcycles. But that sort of wealth of operating profit might have an expiration date because electrification in India and major two-wheel markets are posing a challenge.
Nick, Avril in Singapore here. Just wondering, of course, we have Toyota today as well. What is your sense of what some of these automakers are telling us based on their US-China sales? And given the backdrop of how auto tariffs, of course, is lower than what was previously threatened, how is that helping some of these automakers as well?
In Toyota's case, it's a bit of a mixed bag. The size of the company itself has been helping shield it from the worst of these windfalls in the U.S. and in China. Toyota initially lowered its forecast last quarter after U.S. President Trump announced steep tariffs on Japanese car makers imported to the U.S. But then in July, after Trump, the tariff deal between the U.S. and Japan sort of lowered those tariffs down to a total 15%. Toyota then is in a solid position, analysts say, to maybe stay with that forecast or raise it again after sales in the U.S. are strong.
Bloomberg automotive reporter Nick Takahashi here with the latest on those car maker earnings that we're expecting this week. It's an earnings heavy week when it comes to Japanese markets. The ones that we're following right now, Hitachi, NEC, and Fujitsu set for record profits on the IT spending that we're seeing in the country. And remember, these three firms have solid order backlogs, rising margins, continued policy support, which is why we are expecting these record profits to come in from these companies. Japan is pushing to modernize government and corporate IT spending systems, which is leading to more spending on these legacy hardware makers. So this earnings windfall expected for these three companies that at the moment are under pressure because we're seeing a broad down day across the Asian markets, Avril.
Yeah, it'll be interesting how this might translate into the Chinese session. But of course, we also have a particular company in China in focus. This EV maker Series will start trading in Hong Kong today after raising $1.8 billion in its IPO. Shares of Huawei's EV partner rose in grey market trading on Tuesday. Asia Equities reporter Charlotte Yang joins us now for more. So, Charlotte, it receives blowout interest. What does this tell us about perhaps the company, but also the Hong Kong IPO market?
Yes, so it's a bustling week, I think, for the IPO, Hong Kong IPOs, especially the EV sector. You have Series start trading debut today. The company makes one of China's best-selling luxury vehicles, and it has raised, like you said, $1.8 billion. And during the listing, the stock is priced at a high end, and the shares also rose yesterday on gray market. So this company, it really offers international investors a proxy into the premiumization story in the Chinese EV sector. We've known a lot about price competitions, all that, but Series just years ago it was a little known van maker, but it really changed its brand positioning since its partnership with Huawei through the Ito brand, which Huawei provides the software, also the intelligence side of the cars, while Series assembles the car. So that has really helped boost its brand perception among the Chinese households. Now this IPO in Hong Kong is going to help the company boost its visibility among international investors. And for international investors that are worried about pricing competition, that wants to get supply of this China EV growth story, but more on the premium side of things, the higher margin cars, I think this company is the stock that provides that opportunity.
Yeah, to your point, I mean, competition is key here, right? And the concerns are there for the EV market in China. But at the same time, how much is this a reflection of just the IPO space? I believe this is the 8th listing in Hong Kong as well.
Yes, so for Series, I think the real reactions we're going to see, soon as the market opens. I think that will be a very telling example because the stock is priced at about 22% discount versus the Shanghai listings last close. And also, the Shanghai listing, while it has gained nearly 100, I think it was 1,600% over the past 5 years. This year, it has been actually underperforming the benchmark index because even though, as we said, there is that strong added value with the partnership with Huawei, investors also has concerns about competition, especially as now Huawei has partnered with more automakers in China that's also offering cars with Huawei components on it. So there is that worry about, how is Series going to getting out of this shadow of Huawei in a sense. And also, if you look at the earnings, its profit in the latest quarter fell for the first time in 2 years. And the sales for the first 10 months is largely flat from last year's level. So I think the share price reaction today, I think will show us how much long-term, I think, confidence investors have in this company, especially considering the valuation isn't that cheap after that, sizzling rally over the past 5 years.
Bloomberg's Asia Equities reporter Charlotte Yang. And of course, stay tuned for an exclusive interview with Series Group President John Zhang in the next hour on the China Show as well.
Shery, let's get to some of the market movers we're following today, or news that is influencing what we're seeing on a down day for Asia stocks. Among them, Michael Burry, Cyan Asset Management, disclosing bearish wagers on Nvidia and Palantir, using put options on both stocks. And the move comes just days after the hedge fund manager posted a cryptic warning to retail investors about market exuberance. A recent wave of circular deals, so-called, involving major AI players has been raising concern that the AI boom may be artificially propped up. Meantime, Bain Capital steering clear of backing U.S. data centers, even as its PE rivals race to back the physical infrastructure build-out powering the AI boom. Co-managing partner David Gross says significant capital is already fueling the arms race, but not all players are likely to win. Instead, he says Bain is focusing in Europe's smaller market and opportunities in Asian data infrastructure. And of course, we've been keeping tabs on what has been a really bad day for Asia stocks. It arguably started off with the selling in South Korea Korea and Japan markets already just a day ago, and Wall Street kind of compounded that. So today you're seeing a continuation. There are a couple of drivers, but I think those lofty valuations are the key concern after a huge run-up in Japanese South Korean stocks. For the moment, we are seeing how volatility has been breaking out of a range, and it looks like this is sparking yet more panic in the streets. More ahead on the Asia trade, this is Bloomberg. Quick look at what we're seeing in Asia stock benchmarks on what has been a really torrid day for stocks across the region. And the KOSPI that has been leading the way on the AI narrative for a couple of months now is leading the way down almost 5% for the moment. Now, switching gears, world leaders and climate specialists will gather in Brazil next week for the COP30 summit. The Trump administration is apparently not sending any high-level officials. Still, the COP30 president told us the U.S. will be well represented by leaders from business and academia.
The Paris Accord was designed for the U.S. to join. So, because the U.S. had not joined the Kyoto Protocol, so the international community designed an agreement that the U.S. could join. And so it's obviously very unfortunate that the U.S. is not in. But as many actors in the U.S., very important people in the U.S. say, it's the American government that is not present. It's not the American economy. And so if you take, for instance, the governors that continue to follow the Paris Accord, these governors represent around 60% of the American GDP. So U.S. will be present through local politicians, governors, but also through business, science, universities, etc. So the U.S. is at the COP, but we would have preferred if the American government was also there.
You have said this will be the first implementation COP. What do you mean by that? What will we come out of this COP saying is going to be done in order for the gap, which is now expected to be 2.7 or 2.8 degrees in 2030, not 2, not 1.5, for that to start to happen?
Yes, I think many COPs already said that they announced that they were implementation COPs, which was legitimate at the time. But now we have a strong argument, which is that 10 years after Paris, we have already negotiated what was considered the essential elements of the Paris Accord. So we have everything in place to act, and we only have that now. So this is the first year in which we can really say that we can go ahead and do things because we already have the mandates to do it, and we already have the rules to be able to do it as planned in the Paris Accord.
That's a COP30 president speaking with our colleague VanEck. Right, ahead of the COP30 summit, signatories to the Paris Agreement were required to submit updated emission reduction targets. But the latest analysis suggests those targets fall short of what's needed to meet the agreement's goals. Bloomberg NEF's head of Asia-Pacific, Ali Izadi, joins us to break down the numbers. Ali, so what's the state of the latest emission reduction targets?
So if you look at the latest assessment that the United Nations Framework on Climate Change did, they showed that if the 2030 targets of all countries are met, emissions would decline by about up to 6% relative to 2019 base. Now, what is required to meet the Paris Agreement is at least a 27% reduction in that time period. So there's a significant gap. If there's any silver lining, our own base case economic transition scenario suggests that many of the countries that have set weaker targets will likely do a lot better than what their current targets imply. As for the 2035 targets, right now about 65 countries have already submitted their updated nationally determined contributions to UNFCCC. That still leaves over 100 signatories to submit their updated plans. That includes, for example, notable emitters such as India.
So what are your expectations for progress at this year's COP?
So in the run-up to COP, we've so far scored our expectations 4.1 out of 10. This is a bit lower than the final score we gave to COP29, which was 5.5. We do expect progress on the updated NDCs, so we expect by the time COP concludes, about 75% of global greenhouse gas emissions will be covered by these NDCs. However, we don't expect that the 2035 targets will be aligned with the Paris Agreement goal. We also expect progress on adoption of robust standards for Article 6.4, which governs international cooperation on voluntary carbon credits. We also expect that the final COP30 communique will reiterate the tripling renewable goal by 2030, as well as introduction of a new goal for sustainable fuels to quadruple them by 2035. On other topics, we're likely going to see limited progress. The consensus approach to negotiation at COPs will likely get derailed because there are conflicts of factors such as opposition from the Trump administration, increased trade tensions, as well as various geopolitical conflicts.
So given those challenges, what is actually needed in order to close the gap to the Paris Agreement goal?
So what we really need to see is an acceleration of emission mitigation, which in simple terms just requires more investment in energy transition. Last year, we tracked, for the first time, $2.1 trillion US worth of investment in energy transition. This was a healthy 10% year-on-year growth. However, if you want to be Paris-aligned, we need to see the average annualized investment in energy transition for the remainder of this decade to reach $5.6 trillion US dollars. That means an increase of up to 170%. So we are orders of magnitude right now still far away from this pace. For some sectors, such as solar, and in some countries, such as China, we are closer. But when we look at it globally, we're still far away.
Ali, thank you. Bloomberg NEF Head of APEC Research, Ali Izadi. And of course, all this is coming against the backdrop of the selling in Asia stocks that we're seeing, led by South Korea. And we've also heard how the country is halting the sell orders for program trading in the KOSPI market. We'll track the market moves on the other side of this break. We have more ahead. This is Bloomberg.
We're following the U.S. elections where voters in more than 30 states are casting their ballots on roles as local as school board governors and as prominent as judges, mayors, and governors. Over in New York, voters are headed to the polls to put in a new mayor. They're deciding between the Democratic nominee, Zohran Mamdani, and also the independent candidate, Andrew Cuomo. You can see their headquarters live on that feed right there. Mamdani has led the opinion polls. He's a Democratic socialist, a Queens assemblyman. He's emerged as a contender to become the face of a new left. And this is really a referendum on the future of not only perhaps New York, but the Democratic Party as well. We have in New York concerns about the high cost of living and anxiety over violent crimes. And you can see how Mamdani has led those polls, Avril, with his campaign strategy, blending snappy TikTok videos with relentless grassroots organizing as well.
Yep, and all these races coming against the backdrop of the U.S. government shutdown, where that has meant a lack of data for investors to weigh in on the state of the U.S. economy and the Federal Reserve's trajectory. But take a look at how we are faring on the S&P 500 futures, 4/10 down after we saw the NASDAQ 100 already down 2% in the session. And we are seeing TAIEX futures pointing to yet more selling. It looks like it's going to be a really, really painful day for Asia stocks across the board. Of course, this might not have been entirely unexpected if you take a look at the exuberance that we've been seeing of late. Just even on the region's benchmark, right? The MSCI Asia Pacific had been on a multi-month tear. So watching that, and the China Open is next. That's it from the Asia Trade. Our markets coverage continues. This is Bloomberg.